Good morning. Hey Owen, how are you doing? It has been a couple of days since we last caught up, so I hope you guys have been had a great Thanksgiving, bought a lot during Black Friday, during the sales, and also had a super weekend. Hey Jen B. Good morning, how are you guys doing? Give it a minute or two before we get started. Hey Zara, how are you doing? Okay, looks like everything seems to be working fine, working all right. Do let me know how it goes. And if you're new to the session, do drop a message, say hi, let me know that you're here, let me know where you're joining us from. And, oops. Let me see. Sound should be working. Let me know. Okay, thanks for that, Yvonne. Hey, BL. Alrighty, let's get going. So again, thank you all for joining me on this daily market analysis. It has been a couple of days. We did not do a session on Friday last week because we had good Thanksgiving on Thursday, so markets were super quiet, very consolidative. Friday I was expecting a bit the same. It was pretty much quiet all the way through to the end, right up to the end of the week, and then almost towards closing, and then we saw some volatility. So we did not have a session on Friday, so it has been a couple of days since we last spoke. Hope you guys had a great Thanksgiving, happy Black Friday shopping, and a fantastic weekend. But it is Monday the 27th of November, brand new week, heading into the last bit of the year. So it's going to get interesting with the way prices are going to move towards the end of the year. Okay, so if you're new to the session, like I was saying before, do drop a message, say hi, let me know where you're joining us from. And for all the regulars, a big welcome back. Good to see you all and all the familiar names again. If you have any questions at any point in time, please feel free, put it into the chat, let me know, and help me out massively by clicking on that like and subscribe button on YouTube. If it's a thumbs up button, on TradingView, that little rocket ship, and on trading.live, that hand clappy, and whichever platform you're watching on, do click on something so that we can get more people onto the stream. The link is there for the Discord channel. With that, quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material. The contents of this webinar are not intended to be a recommendation to trade a financial product, so please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. With that, oops, not that one. With that, good morning, Chris. How are you doing? Hey, Diana, good to see you all. Erwin says sound is good, fantastic. Good morning, David, good to see you. Hey, D-Train, how are you doing? Alrighty, so last week, hey, Pips Apprentice. All right, we scroll back to last week since we spoke. All right, so Thursday was Thanksgiving. That's why the US was on a bank holiday. We saw low liquidity, thin trading on Thursday. On Friday, we did have services PMI being released for the US. It went from 50 down to 49.4, so from borderline expansionary down into contractionary, while services PMI for the US went from 50.6, it was 50.9, got revised slightly lower to 50.6, got released at 50.8, so a little bit of a speed up in terms of an expansion, but I don't think it was a lot to shout about, right, from 50.6 to 50.8. Because of this, what we saw late on Friday, you can see on Friday here at 10 o'clock, coinciding with the news, the PMI news release, where manufacturing went from expansionary to contractionary. We did see the dollar index push down, breaking the 61.8 support area down lower. Okay, so this was the view that we had on the 23rd, which was on Thursday, where we were expecting the dollar index to be on low liquidity, retrace to just below 104, and then if it breaks 103.50, it could drop to 103.20. And look what it did. It tested, so this was on Thursday, it came down, it tested this level, bounced right back up to where we expected at 61.8 and 50% retracement level in that region. So it just got to 103.91, just below 104, and then traded down, breaking below 103.50, now heading towards 103.20. Okay, so it's moving as pretty much as planned on the dollar index, but we are looking at possibly further downside on the dollar for the short term now. Okay, because of, well, one main thing is because of the manufacturing PMI for the US. You can also check the CME, where we're seeing Fed funds rates, or likelihood of Fed funds rate decision when it loads, changing a little bit again. This time it was 4.5% for rate hike on the 24th. Now it's dropped to 3%. 97% likelihood that on the 13th of December they're going to hold rates at the current level. Right, so as this bar grows bigger, as a number increases, the chances of a rate hike diminishes, and because of that, then we see that dollar index trading lower. Okay, right now at 103.25, we're looking for it to test 103.20 first, which is the previous low that we saw on the 21st of November, so Tuesday last week. With that, then fast forward to today. Hey Goju, how are you doing? Good morning. Fast forward to today, you can see no big news, no major news. I was thinking, if there's no major news, should we do a session again? But I just thought it was a bit too long since we last spoke. So we do a session today. Although there are no major news, at 10 p.m., we do have the ECB President Lagarde speaking, and she is speaking to testify at the Committee on Economic and Monetary Affairs of the European Parliament in Brussels. That might bring about some volatility, especially on the euro dollar. Likelihood is that we might see a bit of a retrace, but I think that it would continue on with the current trend. Apart from that, so today seems like, today is, if you approach the market today, or the way to approach the market today is really knowing that you had Thursday being very quiet, Friday being relatively quiet, and then the weekend. So you had 4 days of a break, a bit of a break over 4 days. Today is the day to ease back into it, right? It's not a day where you'll be hammering out trades left, right, center. Today is a day that you'll be going, all right, I had a 4-day break. Let's ease back into it. Let's see what are the general trends that are developing before you look to get into any major trades. With that, then onto Tuesday, not Friday, onto Tuesday, we do have Aussie retail sales number in the morning, followed with Governor Bullock speaking at the inflation, financial stability and employment in Hong Kong. I don't think it's going to do too much. And then we have consumer confidence on that. We do have the RBNZ with their rates decision looking to hold on Wednesday. I'll tell you more about that tomorrow. Follow on with some CPI numbers to be released for the Eurozone. And then on to Thursday, PMI numbers for the Chinese, OPEC meetings, GDP, core PCE price index. So we'll pay attention to that. And then on to Friday will be, oh, okay. I was thinking 1st of December, Friday, we might see the non-farm payrolls, but I think it's next Friday, not this Friday. We do have some PMI numbers to be released and Canadian employment numbers, followed with Fed Chair Powell speaking on Saturday at navigating pathways to economic mobility. I don't think it's going to do too much. So it looks like this week there is quite a number of news that could move prices, especially the RBNZ with their rates decision, right? And we might see a bit more of a trending scenario, or depends on what's going to happen on the dollar index, especially as it looks to break below a major swing level. You can see that this point now on 21st of the last time we tested, let me do that again. The last time we tested this level was 21st of November, and before that, if you swing right across, this major support level was last tested on the 30th of August and the 22nd of August. So if that breaks, then we might see rather significant downside potential. Right, the question now is it going to break 103? So this major support here is at 103. If it does break 103, we have 102.80. Maybe about 102.80. 102.40, and then down to 101.80, about there. Okay, so we're coming towards a very crucial level here on the dollar index, and the more I talk about it possibly dropping, the more it looks like it's gaining that strength to the downside. Okay, just checking on Bollinger at the moment, still doing well, so that's fine. Okay. So now, knowing that there are no major news ahead and identifying the key levels that we have already, the question for this week, well, today and leading to this week, is what's going to happen on the dollar index. Today's the 27th of November. Where has the year gone? Hey Jimmy, how are you doing? Good morning, Ayakame. Hiker's Diary, can you please explain how the 10-year Treasury bond yield is decided? How is it decided? It's considered a risk-free rate, so I think it's a market. I don't actually know. I probably will have to refer back, but it's decided possibly against a basket of investments, risk-free rate. I can't think of how is it decided. Wait, let me just do a quick search. Is the yield that government pays investors that purchase a specific industry? Yeah, I think it's pretty much decided by the government's decisions, actions, monetary policy and fiscal policies. The good thing, or rather what I would try and tune your mind towards, is that a lot of things that we're trying to figure out how is it decided or why is it decided this way doesn't really play into a trader's trading decision. You don't really need to know how it's decided. It's good information, it's good background reading, but it doesn't really help with the trades in the overall scheme of things. Okay, and that's also why that never really bothered me on how how it's being decided. And I went through a whole master's in finance. I should know it, but not off the top of my head. All right, I can't give you more information on that. Sorry about that, Hiker's Diary. Echo, hey, how are you doing? Okay, so now dollar index, we've broken this. And see, the thing is, you don't have to know everything about the markets. Take that one away, take this area away, push this down. All right, we've broken this, so we can take that one away. 61.8 actually broke, but we'll keep that there. This I can take away for now. The question here is what's going to happen on the dollar index in this range. Right, as it approaches, just check the H4 again. You can see that once it breaks, I'll draw this right across 103.20. Okay, you can see that although it might break 103.20, but it could find a strong support here at 103 towards a round number. So the decision is actually where you would be looking to see if it breaks below 103, then we could see, in fact, I don't even like 102.80 that much. I know there are a few levels here, but I think that 102.45, no, 102.50 looks like a better level. Okay, all right. So now with that back to the H1 time frame, Ayakame says dollar index might hold 103 to form a double bottom. It needs to hold 103.20 to form a double bottom, so it needs to hold that level. And then also with 103.20 there, it might form a double bottom to push back up. Okay? But what I would advocate is that if I zoomed right out, you can see that the dollar index has been on that downward trajectory. Right? It has been pushing to the downside. And in fact, we can take that one away. It's not relevant anymore. And it's approaching a very key support level. Not saying that it's definitely going to break, but we are going to wait it out and see what happens at this level. So dollar index, we're going to look. It's just being a bit weird. Okay. Let's do that. Okay. This is going to be look for reaction at 103 round number support. Okay, that's a 102, 103.20 and 103 round number support. Okay, so that's the first thing I want to pay attention to, I want to note on the dollar index is what's going to happen at this point. What's going to happen at this point here, and what's going to happen at this point here. Based on the current move, I would be anticipating for it to break, and if it breaks below 103, then we could see that big downward move on towards 102.50. But I think that for today, what I actually think is going to happen is that it's going to find a bit of a support here. It's going to breach, bounce back up, and then maybe come back down again. Right? But today I think it's going to fluctuate along this 103.20 and 103 level. So with that, look for reaction along that support level, could consolidate along key support level. Okay, but overall we're looking, I think we look for that first. So we're looking for the reaction along this level on the dollar index with potential for further downside. Okay, so with that paints the, hey Jack, how are you doing? That paints the picture for the dollar index. and it's going to struggle. That's why I think it's going to come down, bounce a bit, and turn back down before maybe turning back down. It might even, actually now that I look at this, it might even do this. Not so straight, hang on. It might even do this, bounce back up to that trend line, and then turn back down again. Right, so if you're rushing into trades, this might be a trap to catch you out. We're still catching these levels here, so I'm happy with that. We're catching these levels, I'm happy with those. And you see that it could bounce back up to the trend line. Catching this whole thing down here. We would say that even if it comes down here, it will be at 23.6 level. At this current point, it could bounce back up. Yeah, okay, I'll keep that. That fib level doesn't make sense yet because the move is not done. But what we're anticipating is that so long as it stays below this trend line, we are still expecting for the dollar to push lower. Okay. Hey Udemy, good morning from the Willis. Good to see you. All right. So now with the anticipation for further downside on the dollar, that's done. We'll keep that there. That previous high is now here. This is the dollar, Kiwi dollar. Now anticipating further dollar weakness, scrolling back, we're looking for the Kiwi dollar to push higher, right? And we can see that this level here was the high from last week. Even at that point, even if I put this as a bit of a resistance, looking for it to break above, you'd be looking at 0.61, about a 30. Let me just check this level again. Checking this resistance, making sure that we like it. I do like that one. I know it's a bit small, hang on. I do like this point, especially with that. Right, so if I just catch this level here, and that one, so that's the major level that we're looking at, with a bit of an interim level here. Okay, and that's a key level because that's where it hit and reversed on the 4th of August. Now, coming back to the present, that's what I'll be looking out for. Break above. I think the safer one to be looked for 30 pips. Stop loss will be tight. I would say because it's breaking above a resistance, we're looking for, and we're giving it a bit of space, right? You could even be looking at 9.5. 6095. Let's do that. 20 pips, no more than 20 pips on that. Take profit 36 to the upside. Okay, so that's what we look for on the Kiwi to buy 0.6095, stop loss 20, take profit 36 to the upside. Right, just looking for that to break lower, so we see that push up. With that, you would also see that we are seeing that being supported to the upside. I would I would do that instead. I think I'll do that. That would be safer. So 0.61, 30 to 15. You can even do 15, but I'll put 20 there. Give it a bit more space. 0.61, 30 pips. There we go. Okay, so why I give it a little bit more space is I'm thinking that it might do that, come back down and before pushing back up. So I don't want to try and think of getting in too early because we might get hit and then draw down and then push back up again. So I'm giving a bit more space that way. Then on to the Oz. Oh, and one more thing, remember that the Kiwi dollar is at a major resistance. Do also remember that on Wednesday we do have the RBNZ with their rates decision looking to hold at 5.5%. Most likely going to be that. I don't think they'll surprise like the RBA with a rate hike. So I think that if the dollar continues to drop, we're possibly going to see this push up. Okay, then on to the Aussie. So we were looking for that test and reject. That did not happen. We take that away. We were looking for that test and reject. It tested very late on Friday, came back down a little bit, but now pushing back up. So that was actually not a trade that happened. We take all of that away. And now that it's 50% held, it's pushing up, it's breaking above that breaking above that previous high. Next resistance at 6630, which is up there. I'm not placing too much on this because you can see that in fact what would be a better level would be to identify that point. Okay, why that point is because I see that we have this and also this here. So 6620 will be a level that I pay more attention to. And because it's so near, I wouldn't do anything on the Aussie unless it breaks above 6620, that we might see big upside potential. That's possibly going to translate when or if the dollar index breaks below 103. So what I'll look for here is 6630, stop loss tight at about 20 pips. Take profit could go massive to about 90 pips to the upside. Okay, again, very similar to the Kiwi, you can see that it's supported to the upside. It has been trending higher, so we're happy with that. I can take that one away. I just want to clean up my line sometimes. All right, and we have that with that trend line pushing up as well. Okay, so it needs to break above 6630. Stop loss of 20, take profit of 90 to the upside. So we're looking to buy 0.6630, stop loss of 20, take profit of 90 to the upside on the Aussie dollar. Relatively straightforward. How are you going? How are you guys going? Let me know if there's any questions, and if you can, again, a quick reminder, do help me out, click that like and subscribe button, because now as we head towards the yen, all right, take that away. Head and shoulder did not play out with that skewed neckline. 38.2 is still a valid level that is has been held. So it does need to, I can't draw a straight line, let me do a straight line better. Okay, there we go. So it does need to break below this point. I will maintain this view that 148.60, if it breaks below that point, breaking below 38.2, I would say that because it's been in that range since Wednesday, tested, bounced around, further downside on the dollar could push this lower. I wouldn't even think that 61, no, let's keep that there as a possible hesitation, but I will keep that view. So yen, sell 148.60, give it a bit more space. Stop loss 30, take profit 130, hesitation at 148.15. Let's check that. 115, take profit 130, yes, all good. 125, let's say. All right. I am looking forward to this one. Right, this is high on my list. Just this morning, or not this morning, just before this session at that time. Right, just after lunch I was thinking, oh, maybe it's found that support. I don't think we're going to see that push down, but then now we're looking at it, so I'm looking for it to break a bit lower to the downside. That all makes sense. Okay, what's this? Sterling rises, dollar listless as markets brace for post-Thanksgiving buzz. Okay. What does post-Thanksgiving buzz mean? Does it mean it's going to go up or down? All right. Then next up, pound was in that range. We were looking for the pound dollar with that straddle. All right. If it broke lower, it did not break past our point, so we take that one away. Take all that away for now. And then what we saw was that it broke up. All right. It broke out of that range to the upside, but this was relatively late Friday at 6 p.m. GMT plus 8 as it broke above that point. I ended my trading week early last week, so I did not catch this trade to the upside. Did any of you catch this trade to the upside? I think if Jamil is on the session, we probably caught that move. It's very big on trading the pound. So Jamil, if you are on the session, do let me know. All right, so that was a good, almost 60 pip move to the upside. Take that away. We are approaching a a resistance level here at 1.264, almost 1.2640. Okay, that's the swing level that we saw in September. Again, guys, remember, we are in, I'll say we're in November, we're actually almost towards December already, and we're now looking at levels that was tested in September, in August. These are multi-month highs. So what's likely, or what could happen here, is that it could break and then retrace and then continue back up. We're going to anticipate a lot more volatility. What I mean by volatility is that choppy price action at these levels. Okay, so just watch out. Don't at this point in times, it might be reasonable to expect choppy price action, a bit like that. So you might want to wait it out a little bit, right? I put my entries a little bit further away, just so that if it breaks above a key level, we're going to see that fluctuations before the continuation. I don't want to catch a trade right after the resistance. I want to give it a bit more space. Okay, so with that, you can see it retracing a little bit right now. The reaction or the breakthrough is at this resistance of 1.2640. If it breaks above 1.2640, I'll give it 1.2660. Right, my stop loss of 30 pips would be reasonable. My take profit of 70 pips would be towards the next resistance of about 1.2730. Okay. The question here is, could it test this resistance and reverse? Only if it breaks below this point. Only if it breaks below 1.26. You can see a nice round number there. If it breaks below 1.26, then we could anticipate it to come back down. But I think that at this point, the likelihood is for further upside, watching that resistance level. Okay. Dollar index slowed down on its drop. It's rebounded a little bit. but we are looking still at that point. So pound dollar, it is again, look, on Thursday we said look for reaction at that resistance level with the straddle opportunity. Right now I wouldn't go for the straddle so much. I would say that if it breaks above 1.2640, so 1.2660, 30 to 67. Where is it? Pound dollar, we're looking for it to buy 1.2660, stop loss 30, take profit 67, 65, let's put it that, and take all that away. Okay, again, what you notice here is that we're looking to buy the Kiwi, buy the Aussie, sell the yen, buy the pound. It looks like massive dollar weakness expected, but we are all approaching very key or multi-month highs, so just watch out for that. Ultimately, I would still be waiting for that reaction on the dollar index, right? I'll still be waiting for that reaction on the dollar index before I get into any of these trades. Don't go in blind, don't just get in because it's got to that level. We want to see the dollar index weaken before we get into any of these trades. Okay, hope that makes sense. Put it into, you guys are all super quiet, so put it into the chat. Let me know if it makes sense. Say yes or say makes sense, or just let me know we're on the right track. That push up, that's retracing a bit, that's reasonable. Came slightly outside. We do have the realized sales today, 36 to minus 30, so that's going to retrace a little bit. I think that's going to sit there. So that's going to sit around there. Might push down a bit before it pushes up. Okay, main thing is I want it to stay above 1.26. So what could happen on the pound is that you can see that happening. We're looking for that push maybe. Dollar index bouncing a little bit, but it's at that key level. I'll put that there so I don't mess up the chart too much. Okay, so we want to see that break. And on the Bollinger, it's doing fine. It's going to be the next couple of hours that we'll see some action. Thanks for that, Ayakame. Thanks for that, Diana. Now with that, then looking at the euro, bounce back, shot up, turned back down, would have came down a little bit, but retraced right back up because of that dollar weakness. Let me know if you got into that trade. You would have hit a stop loss on that, unfortunately. But right now it's breaking, it's broken that 68. 61.8, so take all that away. We are at that resistance. I want to check this resistance level. That's fine, but I would catch the more recent one, and I'll catch that major level there. Okay, so that's good on the euro. I know that's holding. I want to lead you to consider, thanks for that, Trade God 003. I would lead you to consider, like Ayakami was saying, right? It might be seeing a double bottom on the dollar index. So if we see that double bottom on the dollar index, we might actually see a double top on the euro dollar, right? So if 1.0965 is held, it gets resisted because it's a resistance that was rejected on the 21st or last week. If it gets rejected, possibly something that you can think about on dollar strength scenario, right? And we took this to right up there, we can see that at that point, okay, I know that we have that, but I'm just thinking that if we see a rejection, 1.0950 would be fair. Stop loss could be about 20 pips, relatively tight. Take profit, you could go down all the way that almost 100 pips, but I would say that you'd have 61.8 right there. Okay, so you'd have about 50, 20 to 50. We're considering this as a dollar strength scenario for rejection of that resistance. In the event that the dollar does come down and bounce and break past this trend line back up. Okay, you can see on the 21st of November, it found the support here and bounced right back up. Same thing on 21st of November, it hit this level and turned down. So we're planning in the alternate scenario, if the dollar does strengthen back up, then look for that rejection of 1.0965. I want to see it test and reject. So 1.0950, 20 to 55. Okay, so we look for this to sell 1.0950, stop loss 20, take profit 55 to the downside. And this is on the dollar strength scenario. Okay. I'm just putting that in because as we post it in the Discord channel, sometimes people ask like, why are you buying pound and selling the euro? We're not buying pound and selling the euro. We're buying pound or selling the euro, depending on what the dollar index is going to signal to us. Okay, so it's not buy pound and sell euro. It's if this tests and rejects, I would sell the euro. Which could also lead to the pound dollar turning down, and then you could be looking to sell the pound down. Right? So we're just highlighting different scenarios based on the possible strength or weakness of the dollar index. Then on to the Sweezy. I've been sitting there. Well, I haven't been sitting there and watching, but we've been talking about this on every live stream. It's been consolidating at a support, consolidating. Finally, it's broken down from that support, and now it is approaching that 8796 level. Okay, so that consolidation is done. It's still trading to the downside. In this case, look at it on H4 time frame. You see that it is pushing lower. It does need to break below this point before we'll see a next point down. Okay, and I'll highlight this to show you as well. This is some of the reasons why I don't like trading the Sweezy too much. This is on H4 time frame. You'll see it's very choppy price movements, a lot of dojis, a lot of indecisions, but on hindsight, it is climbing up, right? Similar to what we have recently, is that it's a lot of indecision, a lot of waiting, and then it pops down. So that's a lot of after effect views. That's possibly it's one of the reasons why it doesn't feature very high on my watch list. At this point right now on the Sweezy, we do have the nice round number at 0.88 as it approaches and bounced. So it does need to break past that point. Possibly not so soon, might bounce a little bit and turn down further. 8790. Take profit in this case could be a good 40 pips. Stop loss, you could have it at 20, would be very generous. I would say 15 would be reasonable. Okay. No, I will keep it at 20 just in case, because of that round number level, we might see it fluctuate a little bit more. So 8790, 20 to 40 to the downside on the Kiwi dollar. sell 0.8790, stop loss 20, take profit 40 to the downside. And you know, this I digress, right? But this again brings up another point where you really can't trade, or you really shouldn't trade every currency pair. Look at my whole list of currency pairs here. I don't trade all of them. I focus mostly on the majors, because you also want to know the characteristics of each pair, of the pair that you are trading, right? Some pairs like the pound and the euro does get into the big trending scenarios, while on the Swiss it has more choppy prices and big spikes and breakouts, very similar to the euro pound as well, right? So these are things that you want to know, so that when you're trading it, you get to understand it a little bit better. Okay, I've just caught that view. Yeah, we're going to see what happens there. And then on to the loonie, the US CAD broke that support level, bounced right back up. Anyone got onto the CAD? Right now pushing back down again. If you caught, wait, let me put that back. If you caught that move, this was what we talked about on Thursday, right? It only happened very late on Friday. So I don't think many of you would have caught that move, which went down briefly about 30 pips to the downside before bouncing back up. Right now at 1.3631. I saw a news on this CAD. There you go. CAD retraces the recent losses as crude prices drop, moves above 1.3650. Right, so back above 1.3650. That was a bit late on that news because it's right back down. And now I would say that looking for that continuation to the downside on the CAD, 1.3620 will be safer. 25 pip stop, 50 pip take to the downside towards the support level that we identified here on the 10th of August. Okay, so not very far, not as far away as compared to many of the other pairs, but that's what we'll be looking out for on the US CAD. Hey Atir, how are you doing? So 1.3620, we saw it bounce, we saw it drop, gather the liquidity, bounce back up, and then now coming back down again. So we're looking for it to be 1.3620, stop loss 25, take profit 50 to the downside. Stop loss 25, take profit 50 to the downside. Okay, dollar index is still bouncing. We're looking for that reaction there. Then on to gold. Right, gold, we were saying on Thursday, break above 2000 to trade to 2007, 2009. It did that and way beyond. So it got to 2009, broke past that because that was a major high that we saw on the 28th of August, and beyond that on the H4 time frame, you'll see that once it got past, we got to the next resistance at 2021. So right now it shot up and pushed higher. I'll keep this there. I did not catch this move on gold. I was done with trading that was on the weekend, and then this morning I wasn't even looking at that as it spiked up. Okay. Now at this point, it's found a support to push up towards 2021 naturally. Okay, we can take these away and that away. Everything else stays. And if I caught this level here, let's just check some levels at this point. 38.2 will be there, 23, 38.2 will be there. Okay, so what I'm looking out for here on gold would be, needs to stay above 2007, right? And beyond 2013, you get to 2021. All right, so thought on gold would be, needs to stay above 2007, above 2013, could trade up to 2021. There we go. Still watching on what this is going to do. Right, and as this breaks lower, then it's going to have that inverse relationship with gold to push this up. So I would be watching for that. So it needs to stay above 2007. That makes sense. It's consolidating there. It needs to break above 2013 to trade up towards 2021. Right, so if you were looking, then you would set the alert, you know, above 2013. I would trade it up or scalp it up, or short-term intraday trades up towards 2021. On H4 time frame, checking that 2021 level makes sense. I'll be happy with that. Okay. Short and sharp session, a little bit earlier than a little bit faster than I expected. Any further questions, do let me know. You can also check out my, and if you haven't already, do help me out. Click that like and subscribe button, that little rocket ship button on TradingView as well. I did two quick posts about the RSI here, so you can check that one out as well. Okay, so do check that out. And if not, then please remember, do join us on Discord. That's where we can take our discussions. I do a lot more writing, I do a lot more posting in the Discord channel as well. Most recently, one about trade signals, so do join to find out more about that, or why you shouldn't get onto one. And if you have any questions as well, while you're trading, any setups to check or anything you need a viewpoint on, you can ask that on the Discord channel. With that said, I look forward to seeing you all tomorrow during the session, but we can catch up in the Discord channel as well. Thanks D-Train, thanks Diana, thanks Pips Apprentice. I am still stalking the dollar index right now. Just want to see what's likely to happen, whether it's going to break up from that point. With that said, please trade well, trade safe, and I'll see you all on Discord. If not, then tomorrow during the stream. Take care now. Bye bye.